Hi, everyone. Today is Monday, June the 2nd, and this is the Moneyball Morning Report for the Benzinga Pro platform. First, we'll begin with the ES. We have a pretty news-heavy week before we jump into the chart specifically. Today, June 2nd, we have PMI at 9:45 Eastern. We've got the manufacturing index at 10. We have consumer spending also at 10. Make sure you set your alerts for this kind of information. That's going to give us sort of a heads up. Set an alert for about 5 minutes before that so you can make sure that your trades are carefully managed. The next day, factory orders, jolts, maybe. But Wednesday, we've got the EIA, we've got ISM services, and then the ADP report coming in at 8:15. That has a tendency to move markets. We've got international trade, jobless claims, production and costs, probably going to be something folks keep an eye on. And then Friday, the big whammy on June the 6th is the employment number. So we've got, and the consumer credit at 3 p.m. So it's important to keep your eyes on these times because markets can move. And if we're intraday traders, we have to take a look at those sorts of things. So taking a look at the E-mini S&P, pardon me, the range is about, for the Globex Open, the range is somewhere around 20 points, so not dramatic. And we can see two high volume areas over previous days that we're now climbing into. And one of those high volume areas was bullish, but it only went into the top of the prior bearish area. Okay? And so watching this volume, especially over, the prior 3-4 days, recent past has a higher predictive indicator than far past, right? And this is something that we have to notice. It's sort of like the weather guys. People give them a hard time, but there's so many dynamic indicators with weather. They're only good for about 3 days. And so that's really what we have to keep our eyes on as intraday traders and notice the overall range. So that's what we're looking at. The high Globex Open of Friday is 59.20. The low Globex Open of Friday is somewhere around 59.09. If we cannot get past that level, we should have downside into, as I drew yesterday, into the low areas of Friday, and that should give us about 58.56. This is also all the hat tips to Mentor Q. They now have intraday motions that you can stare down as well, and it's really worth the opportunity to give it a try, certainly since I use these formations and you can say, oh, I see what she's doing there. All right, so swing high to swing low, we're still in a downward zigzag pattern, but we are trying to recover. And so my suspicion is because we have such a news-heavy week, we're going to range potentially from the bottom of this area, 58, I don't know, my eyeballs aren't working here, 58.55 to the top of the range at 59.34. Trend is flat. Momentum, also flat. Both of these indicators tell me we've got ranges. If we look at the low end of the range and decide to go long, getting up through the opening range into 59.09 is going to be important. If you want to get in front of the move because you potentially think the market is ranging, you could take a long somewhere along heavy congestion at 58. What in the world is that number? 58.62. How about putting on the old glasses? Can we do that? Glasses. Here we go. Yeah, 58.82, excuse me. And we can try the long there. If you're so inclined, the stop would be 58.65. Getting to the top of the move, 59.34, is going to be the extended upward path. My thought would be the target range of 5,920. Okay, could anything happen? Of course, anything can happen. But we have some supportive value being given to us by the VWAP being underneath, and that's important. Okay, that's really important. It's going to give us probably the push up into those higher levels. This mosh pit action, I'm looking for lows to go long at around 68.80, 58.80 to 58.60, and shorts at 59.34 to 59.20. Otherwise, I'm going to sit on my hands. Remember, today we've got Midday Moneyball for those of us on the Benzinga Pro platform. We will be looking at what's going on in a few of these complexes and see if we can figure out some nice trades to take with a shorter time cycle, right? Because we're looking at a lot of noise. Okay, so what do we have? Two things to look at. First, we're going to look at the volume action. So we can see there's the large volume action in the NQ around a low of 21,374. But we also have a high volume area up at 21,437. What does this tell me? Well, we've got a little bit of a mixed bag. And so what we want to look at, what is trend? Our zigzag pattern, swing high to swing low, still in play. It is negative, but trying to recover. The zigzag pattern, if you look at it in other formations, you can see here is the new zigzag. We'll put it down here. That 50% marker is 21,466. That's also going to be a region that we can use as a target buying the dip. Now, we've got negative trend, we've got a flat moving average, and we've got flat momentum. So it tells us that we will move from peak to trough back into the middle of the valley, right? And so my suspicion is pullbacks here will give me buy zone. So what is the trade? Ideally, I'd like to see the bounce off the expected move of 21,181. The stop needs to be fairly tight. Okay, so we're looking at about maybe 30 points of risk in the NQ. That's pretty tight. And so pushing it up into that region gives us the first target at 21,289, the second target at 21,344, and the third target, the high of the Globex open candle, which is 21,396. Okay, and then these two pockets of volume here that I have moved with our shaded boxes tell us, hey, if we break out over there, the traders that are short are going to be flat-footed. It's going to push us up into the 21,544 area, which is the expected move for today. Something to note, the NQ volatility into the end of the week is much higher than the implied volatility in the ES. That's something to watch. Not sure what's going to go on there. Could be something with chip news that people are expecting. I do not expect us to run all the way there. I would expect us to potentially come into the trend line on this zigzag or the test of the moving average. So that's what I'd be looking for. Could you short? Absolutely. If it comes into the region near 21,435, and then it loses 21,435, you've got short action that sends us back into the heavy congestion of the opening range area, which is about, what is that, 50 points, 60 points wide? Again, not very much. Let's take a look at the YM. The YM looks a little bit different. Hello. The YM looks a little bit different than the ES or the NQ because of this selling candle that occurred on Friday. Everyone else, ES and Q, those guys, they had a buying candle there. So something's afoot, right? Here's the thought. We have two heavy congestion zones. Both of them are bearish. And so my suspicion is that we bounce into resistance and then fade. Now notice, look at how different this is. The zigzag pattern shows uptrend. The, yeah, that's a moving average. My brain, good heavens. The moving average is flat and momentum is flat. So what does that tell us? Peak to trough, peak to trough. That's what we're staring down. So the edges make the greater trade for a longer hold. That being said, if you don't like waiting for 300 points to transpire, are we above the VWAP? Yes. Are we making higher lows? Yes. Is the zigzag pattern telling us that we're on that recovery space from the swing high to swing low? Yes. So it shows that there is upward trajectory all the way up to 42,326 and potentially 42,375, which is another bullish box. I'm just drawing a line there simply because I don't want to draw three boxes because, they're all overlapping each other in this particular space. All right. The opening trade formation tells us that once we get inside of the opening trade, it's very likely if we have VWAP support that we go to the top of that opening range. My levels are a little wonky here. Let's fix that. And I appreciate you having patience with your anal retentive price analyst here that I am. Okay, so that's what we're staring down. Is this essentially sideways? Yes. Deep dips into 42,000 going to give us buy zones with about 50 points of risk. We've got motion that's really telling us we've got some sort of reflexive bouncing jagged in between moving averages. Let's have a look at Bitcoin. Bitcoin, if you watched me on Market Kickoff, you'll notice that Market Kickoff on Top Step TV, you'll notice that I said, hey, this is a short. I'm taking a short. Now, take a look at what's going on here. Let me get this weekly. This is all the way down at the 100 area. Hang on. It's right at about this zone. Okay? My suspicion is that this is a pretty good downward formation. Look at the zigzag pattern. See how tight it is? This tightness tells us that trend, the tighter a zigzag is, the more solid the trend is. And we can see that looking at the slope of the moving average. What is it? It's down, right? The opening range was about 600 points wide. We bounced at 4 a.m., but my trade short was from the loss of this zone, which was last week's expected move, and the low of this candlestick formation for the opening range trade. So important, folks. This Globex hour really matters. They came into the level, broke down, went through the low, and continued into the frontline support. All right, so really, what do we expect to see here? Could the traders bounce off of 104,377? Yes. As a matter of fact, I expect them to a little, but the bounces are clearly sell zones. I would not be looking at long formations here until we had some kind of structure hold, which would be an hourly candlestick that holds like this. And notice how big this range. This is a monster selling candle. And if we lose it, the shorts are going to be firmly in command and send us down into the expected move of the day down here at 103 and change. So love the bounces equal selling zones. If per happenstance we get ourselves a good bounce, the ideal bounce pattern is essentially halfway through the opening range. And this wick at, 106,500 would be the stopping zone. So my suspicion would be, let's see if we can bounce into 105,700. That's the closing VWAP on Friday. And that gives us a nice short action down into these lower levels. Absolutely beautiful. Okay. Did I mention that the full moon is June 11th? Yes. Stock buybacks tighten up June 15th, full moon June 11th. Looking for rotation, probably for a few days down into that level. I don't know what the employment numbers are going to tell us, but pretty important that we just follow trend. And I love how tight this zigzag pattern is. It really tells us we've got downside pressure in Bitcoin. But that being said, you don't want to short this area. Let it bounce and come back into the opening range event, or maybe a kiss of the VWAP and reject. And that opening range and VWAP area is about 105,562. I like the short there, all the way into 106,000. So a little bit of risk, but if you trade small size and then add on the way down, you're in really great shape. All right, let's take a look at oil. Oil had a massive candlestick, right? So take a look at this formation. We have, let's see if I can't remember if this is a bullish or bearish candlestick. Bullish candlestick formation with high volume, right? Remember, if we break out of a formation like that and then retest it and it holds, it's going to give us further upside. Oil just crashed into the weekly implied volatility move. If I were a betting man, I would say, hey, I expect a fade and a retest of the high volume area or the wave edge at my first target, which is $63.05. To go up to 63.50, the implied vol move right around there, and then really start rejecting, it's a good signal that price action is very likely to fade from there into support zones where it's another long. Look at the slope of the VWAP. Very upward. Look at the slope of the moving average. Flat. Look at the slope of the zigzag. Very upward. Momentum also bullish, but we have technical divergence. See the high here, and then higher highs in price, but lower momentum. And so that normally tells me watch for the fade. So I love a short right up here at $63.35. First target, $63.05. Stop, really, only 10 cents wide. You could even put a buy stop there if you think it's going to expand and open up this zigzag pattern. Easily, that could be something that could happen, especially with the news. We have, Ukraine bombing some area of Russia over the weekend. I'm sorry, I don't know the area of Russia that they set. I don't know if it's drones or whatever they set down, but, Zelensky is not, he's not backing down, and, Russia is not backing down either. So, does this end up being a 10-year stalemate? Who knows? So that being said, bounces or fades into support, at which point price action will tell the tale about whether we fall back into this candlestick motion or we hold the edge and continue to the north. It's a little bit of a mixed bag, Volatility, measured move. Okay, what's the measured move? Look at the measured move on the day. I mean, we broke it right at the open, right? That's pretty extraordinary, actually. And so could we come back there? I don't know. But if the traders can't get back there, they're going to drive the market higher. Remember, that's where they've sold the calls. And that's going to be really pretty important from a price action perspective. Yeah, that's what we're staring down. Let's go to gold. This one is big. This line right here, up here at 33.73, that's a weekly move, right? That is a weekly expected move, and it's all the way over there. So this is in another sort of blow off top where people are scrambling because they're on the wrong side of the trade. Notice, big volume candlestick here that was down, they already moved past it, right? So that means the shorts are flat-footed up over this area. The longs took over. Look at this motion. Big short action here on May the 28th. The longs took over on May 30th, and whoopsie. And we broke out of that zone and ended up moving to the north. Very bullish, friends. Very bullish. However, there's a call wall at 3,400. It also happens to be a very big volume area from times past in recent candlesticks. I can't see the volume here. It won't show it to me, but I do see it from other charts. And so that 3,400 is a big deal. TrendSpider, Menther Q's TrendSpider is also showing call resistance there. My suspicion is they don't go much further than this edge. I don't think they get into the higher levels. I just don't. I think they reject here. That being said, what is the trend? Well, the moving average is flat. The zigzag pattern shows clear upward trend. The VWAP also very bullish. A lot of things saying this could run for a hot minute. And notice there is no negative divergence here. So dips are still buy zones in a runoff to the top. Because I have a bearish bias up at the top here, but trend is up, the VWAP is up, momentum is up, I'm not taking any trades because there's cognitive dissonance sitting in my head, and I don't like to overthink what I'm doing with my positions. Let's take a look at the SPY. What's going on with the SPY? We've got an expected move low end, that's higher, at $585. The high of the expected move is all the way up here at 593. Right? Now, do I think it's going to get there? No. I think it's going to visit. Hello, come on. Oh, it's not letting me go to these areas. My suspicion is that the area we stall out at, if we continue to move to the north, is really 591. Notice, bearish candlestick formation, traders trying to recover. We're inside of that area. So far, though, on the opening range, we bounce out, but we cannot stay out. And so what is momentum? It's a little bit flat. What is trend? It's up to flat. Look at how wide the zigzag is here and how thin, how shallow the slope is. Because of that, we have this potential of, okay, what is this? Yeah, swing high, swing low. We're still battling this 50% area. I like the longs at about 585 to collapse us into the 591. If we lose 585, we're down at the bottom of the range, 583, to the trend line of the zigzag pattern, which is 581. Lastly, let's go to Qs. Here's our opening range. Look at that wick. Holy smokes. Again, what are we doing? Where's the big volume? Right? We're staring down big volume. It went halfway into the space and then collapsed. The next upward volume event is, the next downward volume event with size is from May 28th. Notice we came into that box and rejected it. So there is a battleground right here. What is, oh wow, look at the cross guard here. What is the slope of our moving average? Well, it's up to flat. What is momentum? Generally flat. What is the VWAP slope? It's down, but we're trying to get above it. What's the zigzag? It's down. So what does that tell you? What it tells me is that it's clear as mud. So only the edges are going to make good trades today, unless you're trading something bananas like a 3-minute, and then you're going to get all kinds of false signals that will drive you batty. My thought is, look at where all the volume's piled up. Get yourself involved there. A short at $520 looks good. A long, at the extreme levels, maybe at the test of this band here in the zigzag pattern at about 512. That's also the expected move for the day. Otherwise, hands off here. It just looks terrible. It looks absolutely terrible. All right. Good luck trading today, everybody. Sorry about this voice I've got. It's the summertime allergy thing. And I will see you all very soon. Looking forward to Midday Moneyball and all the like. Please have a look at Mentor Q. It's fantastic. Send him a note. Tell him that I sent you. And, hopefully you get as much use out of it as I do. All right. Take care, everyone. Yeah, because this works for an amazing amount of stocks, all kinds of things, everything that you could possibly think of. It is a fabulous instrument. All right. Take care, everybody.